Hey, how's it going, everybody? Russell Moore coming to you live again from Dedicated to Financial Literacy. And be sure to hit the subscribe button, notify button, and give me a like if you like the content. And continue to shoot out the content to you. Real quickly, it's been a minute since I've been on the channel, and so I just want to welcome everybody back. Thank you for tuning in. And I want to going to kind of make this quick. Um, as quick as possible. I'm going to talk about a couple of things, uh, the market a little bit, and then housing. And people are really kind of going through changes and are confused about the housing market right now and what to do. What to do? Should I buy? Should I not? Should I buy? Should I not? What are we going to do? What's going to happen with the market? Are we in a bubble? You're hearing all those kinds of questions. Um, Ken McElroy, I believe that's his name. A very good channel. Him and his wife Danielle. Um, they're it's a good channel. You might want to tune into them. I just want to give a shout out to them. They give a lot of good content. Anyway, I'll start off with the market. Just talking about the market real quick. It's anybody that unless you've been sleeping under a rock, we are definitely in a correction. Some people are calling it a crash. Definitely a correction right now. The market is correcting. The Dow Jones, Nasdaq, S&P, Russell 2000, all the markets have been down. A lot of it was today was a response to the job numbers. I think we were up 300, about 385,000 jobs that were added in May, and so it caused a little stir in the job in the market. The other thing I wanted to mention real quickly is uh, Monday. Monday, I believe, is the 6th, where Amazon will be having their 20 to 1 stock split. If you missed the deadline, I believe it was May 30th. I believe there was a deadline on when to purchase shares, where that you could get in on the stock split on Monday. Now, after the initial stock split happens, you'll be able to purchase shares. Okay, um, but that should be interesting on how that's going to go. I want to make this. I want to say this right from the beginning. This is my disclaimer. I'm not telling people what to do. I'm not telling you to buy any shares. I'm not telling you to sell your shares. I'm not telling you to do anything concerning the concerning Amazon. If you want to know what I'm doing, yeah, I got some call options today. I believe it's going to go up, like I've said in my previous video, that what the market will do is when there's a stock split, particularly a company like Amazon, normally what will happen is the retail investors and some into institutional investors, they will actually begin to buy shares because remember the shares will be down to about 100 between 130 and $150 on Monday. And so everybody's going to they're going to get excited like, yay. And, Amazon is low. It's at a low price. And then they'll begin to purchase. And so that will cause the stock to rise. But be careful because there's going to be a sell off. Some traders, day traders, swing traders I'm not talking about long term investors, will be like, you know what? I'm going to make some quick money and get out of the market. So that's usually what happens. I'm not promising you that's what's going to happen, but usually there's a mad rush. It'll go up maybe a day, maybe even in the same day it'll go down. But give it a couple of days, probably a day or two, and then boom, you'll get an initial crash. And some people will buy more shares, and it'll gradually go back up. Okay, so yeah, that's Amazon. Get ready for Google. It'll be next July. Google will be, and watch my videos on stock splits. I'm not going to go into all of that. Okay, so that's it for the market. Now, the housing market. Are we in a bubble? I think so. Yeah, yeah, to some degree, because remember the feds raised the rates in March. Okay, so we're at between 3.6%, 3.6% and 5.6% as far as mortgage rates. So if you purchase a home right now, you're going to be paying around anywhere between 3.6 and 5.6 for your a loan. Your rate will be between 3.6 and 5.6 and climbing. And so some people are afraid because they're saying, yeah, the rates are gone up, but the prices of homes, and particularly here in California, the prices of homes are not taking a dive. They are a little bit. Some buyers are starting to panic and say, you know what? Um, sellers are some sellers are starting to panic, not buyers, sellers are starting to panic and say, you know what, am I man, I should have sold earlier, or will I be able to sell my house because some of the buyers are being priced out. Because remember, when the mortgage rates go up, that means you'll need more loan. You'll need more money when you get your loan. So you'll need to qualify for more. And some people are right on the brink of not being able to qualify anyway. And then now, since the rates are up, it'll price them out. They won't be able to get the loan. They won't be able to get approved. So some people will come out because of that. Some will say, you know what? If the rates are going up, that means at one point the prices of the homes will come down. So you got a percentage of people that are going to pull back and wait and say, you know what, I've waited this long. I'm going to wait and see what the market does. Everybody's saying we're in a crash. It's going to come down. So, based on speculation, many people are going to pull out and say, I'm going to wait until the prices come down. And you guys, they will. They will. When the rates go up at one point, they're gonna come down. But that could be depending on what market you're in. I live in California. We have 44 million people here. And right now, our inventory as far as homes, we are right now around 2.2 million short the homes that we need to have. So because inventory is so low, I'm not so sure that the housing market, I believe it's going to come down. What goes up must come down, okay? But I don't believe it's going to be as fast here in California. I can't speak for Texas. I can't speak to Idaho, Boise, Idaho, which I hear is like very overpriced and it's definitely going to have a crash. I can't speak for Vegas. I can't speak for Phoenix, Arizona. You know what I'm saying? I can't speak for Washington, Seattle, which is the second highest market next to California and New York. So here's my thing. Here's my thing. If you're planning on keeping the house and not moving out and you're going to be in there 10 years plus, then yeah, I would look to try to buy one because here's the issue. If you don't, the rates are going to continue to go up. By the end of this year, next year, the mortgage rate could easily be at 7 to 8%. Yeah, and will the prices of the home go down enough to offset that rate? I don't know. Many people are saying 25 to 30%. Eventually, the housing market in California will go down, depending on what part of California. Northern California, much more. People are getting out of there, leaving San Francisco. Their houses and the prices are extremely too high. So they're going to come down, and they're going to probably come down about 30, 40% at one point. Ventura, San Diego, Southern California, Orange County, yeah, to some degree, but will it be enough? Will it be enough? And how long will you have to wait before they come down low enough for you to be able to purchase a home? Okay, so use wisdom during this time. The plan that my wife and I, we have several options. We bought a house in November of 2021, 2.7, 2.7 rate, a great rate, 30 years fixed, 30-year fixed loan. We're locked in, baby. And get this, because the renting an apartment or a home in our market in this area, a 3 bedroom, 3 bath, which is what we have, was between 16 and 1700 square feet. It's around between 34 and 3,900 a month, and in some cases four grand a month. Our mortgage is only 1,900. You add on that hacking or renting out one of our bedrooms for $500 to $600, you're talking $1,300. Okay, let's add the HOA. Let's add the taxes. That's another about between $700 and $800 a month. But you're talking okay, $2,000 versus paying 4,000, almost 4,000 if we rent it. And here's the thing: when you're renting, you're actually paying for somebody else's home. They're using you. They are using you to pay off their loan. So guess what? You're paying on a loan. You're paying on a mortgage. Have you ever thought about that? When you're renting, you're actually paying on a mortgage. It's just somebody else's mortgage. You're paying it for them when you can own your own. Now, I'm not saying going into buying a home ill advisedly. And, for those that are believers out there, Chris, pray about it. Ask God to lead you and show you and bring the house to you and begin to speak it forth into existence. But I don't know if you want to wait till the rates are 8, 9%, which is definitely a possibility. The way this administration has run this economy is absolutely crazy. So, anyway, but one of the options that we thought about is renting this out, getting a little closer to LA. My job, my wife works from home, online teacher, so she works online. So guess what? We're not using one of our vehicles hardly at all. So that's cutting back on gas, which is about $7 a gallon here in California. So we're saving on that front. And then I told her, look, I have a property management background. Why not me look for a property management, a property where I can manage? Usually you can find one where you do not pay any rent. No, you don't pay for rent. And in some cases, I was a property manager in Long Beach, California. And not only did I have a 2-bedroom apartment that was free, no rent, but I had a stipend every month for all the utilities. And I only had to commit to 20 hours a week. So that enabled me to get another job. Because, yeah, even though the rent was paid and the utilities were paid, you still need extra money. You got to eat food and all of that. But can you imagine in California, over 70%, it is considered over 70%, anywhere between, let me rephrase that, between 60 and 70. And in San Francisco, over 80% of a person's salary is used towards their living situation, rent or mortgage. Can you imagine 70%? That's crazy. Okay, so we removed that. We got somebody. We're renting our house. We also would get cash flow because we would rent it out for about 3,800. When I just told you we're paying 2,000, so not only are they paying for the rent, the mortgage, but they'll be paying our HOAs and our taxes. And we could even do a below market value at around 3,500 and still be making about $700-800 cash flow. Living in a free apartment, I'm taking care of the apartment, still able to work, do my job for my church, work for them full time. So we have options. We haven't decided on that yet, but it's something that we're considering after about a year being here, a year and a half. Be creative. Ask God to show you. You can do things that are very creative. And here's the thing about property management, if you look into it, um, you don't need a license. And in some cases, you don't even need the experience. Some people want experience, but it's not mandatory. You collect rent, turn it in. If there's a problem with one of the apartments, you call a vendor. Now, some property management companies, they want you to have some experience in fixing things. I was a maintenance tech for about 7 years, so I'm pretty handy with fixing certain things. So, but if you can find one where you're just relying mostly on vendors, and make sure it's a small building. Anything over 30, it's too much work. You won't rest. I'll do another video just on property management, being a resident manager or a property manager. I think I'll do a video on that. And for people that may be interested, it's a good way to just to supplement your income. Um, you get a building, you're over it. Usually, especially if you have a building where there's not a lot of drama, look for older people, elderly. They're not going to cause any problems. You don't have to worry about noise and partying, all of that kind of stuff. There's certain things that you can look for. It can be tough to get in, but once you get in, you're in like Flynn, and you rent free. Take care of the building. Make sure that you know. Make sure it's maintenance low. You have vendors that you can reach out to come in and fix if there's a problem in one of the apartments. Take care of your tenants and just stay there and save your chips, save your money. So my wife could actually basically save her whole salary. You guys get that? Now we're putting money away for another building to purchase rental investment property. And we got somebody else paying off our home. And we got cash flow coming. So we're making money from this home. We got plans, baby. Think outside the box. God bless you. Love you guys. Have a wonderful, wonderful week. God loves you.